Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. To start things off, blockchain search and analytics platform Blockchair, their lead developer Nikita Zarafunovkov says an altcoin will likely replace Bitcoin as the leading cryptocurrency within the next 5 years. In a series of tweets, Zarakonov explained why he believes Bitcoin's lack of smart contracts, new privacy features, and scaling technologies will eventually spell trouble for the king coin. He says Ethereum, currently the second largest cryptocurrency by market cap, will most likely topple Bitcoin, although other digital assets may also rise to the top position in the crypto market. He pointed to Ethereum 2.0, which is designed to dramatically improve Ethereum's transaction speed and volume through a proof-of-stake system as the potential turning point. He said, and I do quote, "Now where does Bitcoin stand today? It's been five years since the scaling debate has started. An eternity. And instead of having another round of the debate, we can now draw some conclusions on what happens if there's no on-chain scaling. If Bitcoin further stagnates while other cryptos flourish, the dominance will continue to drop. And now comes the biggest potential disaster for Bitcoin. Imagine, proof of stake on Ethereum is finally ready and everyone will rush to buy 32 Ether to stake. Quite a probable scenario," end quote. The long-awaited Ethereum 2.0 upgrade will be launched in a series of steps. The initial release, dubbed Phase 0, could happen at the end of this year or early next year, according to testnet coordinator Afri Shodan, which is also kind of weird because the news that we had before was that it was going to be happening in June, and then we had news that it's going to be happening in Q3 of this year. So we heard nothing about the end of this year or early next year, which once again will then push it even further back. Zarakornov says anyone who doubts Ethereum's ability to flip Bitcoin should look at the history of the internet and realize just how volatile and wild the cryptocurrency market really is. When I explain or say out loud that this year, 2020, is simply just a mimic of 2017, this is exactly what I mean. For those of you who have not been here for a good 3.5 years, take out your phone, your tablet, do something, and type in Ethereum flippening. I know it's not a real word, but it's flip and then inning, and you'll see exactly what I'm talking about. The same discussion was had 3 years ago where everyone thought that because Ethereum did, I think, 3 times or 3x the number of transactions that Bitcoin could during a second, a minute, what have you, that Ethereum was going to flip Bitcoin and become the #1 coin. While Ethereum did skyrocket in price, it was nothing compared to what Bitcoin did, what we saw with Bitcoin. This ruffled a more than a few feathers this morning. A lot of people tend to get very riled up when someone says that something can or could or will pass Bitcoin, especially when we're just simply having the same discussion over and over again. Once again, let us not forget we were supposed to have had Ethereum 2.0 in 2017 and then Ethereum 3.0 in 2018. And at this point, we were supposed to have a mega world computer Ethereum. So while people could, I mean, Bitcoin hasn't changed and it just is what it is. Bitcoin has not promised to hyper upgrade. Bitcoin has not promised a 2.0 or a 5.0 or a new level of anything. It's things that are happening on the side chains. And we know that on side chains, as they are scalable and more or less stackable, that Bitcoin can have smart contracts and privacy features and new things that make Bitcoin just the same as every other coin. However, the core is probably always going to remain the same, as it is the most guarded blockchain on the block. Anyway, yeah, this is likely going to be a continued discussion. And I assume this will pop up once again. Should we have any, I mean, listen, the entire Ethereum 2.0 discussion at this point is, it's more of like, come on, just do it, as opposed to if we will ever get it. Because we also had news last year that we would see it at the beginning of this year. Did anyone forget that? It was supposed to be January of this year like this year now that we would see Ethereum 2.0. And then it was June, then it was July, and then it was Q3. And according to this article, something that we all clearly missed, supposed to be at the end of this year or the beginning of next year. I do not personally foresee a future where Bitcoin is going to be dethroned by Ethereum. I do, however, see them working side by side, because why not? I mean, it's totally believable that parts of the world will adopt Bitcoin heavily while other parts will adopt the usage of the Ethereum blockchain for their transactions and or their whatever you kind of want to say. But as it stands right now, Bitcoin is clearly the number one. Yeah, a lot of people were very upset. If you look around for this discussion, people are never too happy when someone says that Bitcoin can be pushed aside by an altcoin. Anyway, that's news. And without further ado, let us move on. Also in news that was literally everywhere news, London-based investment firm ETC Group plans to list a Bitcoin-backed security on the German electronic trading market later this month. The firm announced on Tuesday the exchange-traded product, called the Bitcoin Exchange Traded Crypto BTCE, is the world's first centrally cleared derivative crypto asset and would be listed on the Deutsche Börse's Extra market based in Frankfurt. Central clearing is a tool used in the European derivatives market to bolster stability by ensuring a financial institution takes on counterparty credit risk. The crypto security is also backed by Bitcoin, with each share giving the holder a claim to a specific amount of the cryptocurrency. According to the company, the physical Bitcoin will be stored in a cold vault, meaning one not connected to the internet, operated by Palo Alto, California-based custodian BitGo. They said investors get the benefit of trading and owning Bitcoin through a regulated security while having the option to redeem Bitcoin if they choose. It really is a hybrid exchange-traded product that has the same feature as an exchange-traded fund. I don't know why they wrote that differently here. Because it's a single asset instrument, it doesn't qualify to be an exchange-traded fund according to the European fund regime. The point is, once again, Germany, for some reason, at the forefront of the Bitcoin adoption curve. Let us not forget all the other great news that we've heard from Germany before, all the banks who want it, and the 0% taxation fee when it comes to crypto as well. The other interesting part here being is that it's actually backed by Bitcoin. This isn't a US dollar, pound, and or euro based fund. Is going to be backed by Bitcoin. And I wonder exactly what the specific amount of cryptocurrency will be per share. But regardless, it's still absolutely fantastic that this is even coming to fruition, to birth. That is going to be around because, as always, if this succeeds, if this does well, if by the end of a quarter, a period, a year, we see tons of people who are holding the said fund or said security have done very well for themselves, other firms are also going to try and get into it themselves. And this also leads to a massive decrease in the amount of circulating Bitcoin that we... Why won't this move? What is that? That was weird. Anyway, I was trying to move a phone and it wasn't moving. It wasn't even stuck to the table. It was like a... I was doing it again. Okay, anyway. Yes, this is all over the place. German stock exchange will list Bitcoin ETP, physically backed Bitcoin ETC to launch in Germany. And here's the actual news article from Handelsblatt. Of course, this is major news because we now see definitively that institutions and banks and corporations and stock exchanges are very heavily into Bitcoin, which also kind of goes to back up the thing I was saying during the first article. We do not often hear that Ethereum is going to be added to these things. It's usually always Bitcoin. There's always some type of a Bitcoin feature, a Bitcoin product, a Bitcoin ETP, a Bitcoin ETF that's making the rounds through the traditional financial system. Ethereum is usually, this is why I said Ethereum is probably going to be around as well, because you have all these governments clamoring around it, talking about how great it is or that they're going to be building stuff on top of it. I don't foresee Ethereum becoming the #1 coin. However, in a free market as we are, Sure, why not? Anyway, yeah, that's the German ETCTP EDF news for today. And I assume we'll have more of these as time goes on. I always just wonder what the exact numbers are, because I'm telling you, I believe that there's actually less than 1 million Bitcoin actually circulating that's passing between hands, especially as we keep getting news of all these companies and institutions just buying up tons of Bitcoin and holding it in cold storage. Like if we got news, what was it, 2 or 3 weeks ago, that the people from Grayscale had accumulated more Bitcoin than had even completely been mined since the halving, they probably logically have purchased at least one more, if not like 7,000. Anyway, yeah, that's news. And without further ado, let's move on. Next up, all over in the news as well, this is also very huge news. A Fidelity survey of 774 institutional investors, very rich people, found that more than 1/3 of firms worldwide have invested in digital assets or derivatives, while 36% of institutions own crypto globally. Multinational financial services company Fidelity found that only 27% of the 441 U.S. institutions surveys are exposed to crypto, although that's up from 22% last year. Close to half of European institutions are long on virtual assets. I repeat, once again, exactly what we were just talking about. Close to half of European institutions are long on virtual assets. And even then more so, even if they aren't as long as other companies and corporations, they probably still have some sort of light exposure in some sort of way, because it's a huge bet at this point. You can't really count crypto out, because if you're that one institution, if Bitcoin ends up going from wherever it is right now to $38,000 and you had no exposure, people will simply leave your fund or leave your corporation and go somewhere else where they saw that they were actually still making their profits. If Bitcoin then goes from 38,000 to 100,000, and you as a family office, as another rich person, and you find that your fund had no exposure at all to this asset that did a 10-20x, you move on with your money, and then that other fund that didn't have exposure to it, they go crumbling down in history as the one fund that didn't adapt. Bitcoin is the most popular cryptocurrency investment, with more than 1/4 of respondents holding Bitcoin, while 11% of firms also own Ether, logically. Fidelity commissioned Greenwich Associates, there we go, to conduct a survey from November until early March, with the data reflecting the crypto positions of firms as of before the violent Black Thursday crash that saw crypto prices drop by more than 50%. More than 60% of institutions who are exposed to crypto have purchased on the spot markets, with the other 40 opting for derivatives. While many institutions are yet to pull the trigger on crypto, 6 in 10 respondents now believe digital assets have a place in their investment portfolio. How times have changed, my goodness. I remember about 2 or 3 years ago, they had another survey similar to this. It wasn't Fidelity, it might have been Bloomberg. I can't remember the exact big money institution who ran one of these surveys. And they were asking these companies, do you have any exposure to crypto? Do you plan on having any exposure to crypto? And they were like, no, we are firmly based in Bitcoin futures that are settled in US dollars. How 2 years, around a good 700 days, things have completely changed. How often it's mind-boggling. But even more so, I mean, you also can in realistic fashion, a lot of these companies and corporations a couple of years ago could have simply lied. I'm pretty sure in 2016 or 17, if we had demanded of the New York Stock Exchange or the NASDAQ, if they were into crypto, they would have said, "Crypto what? I don't know what that is." And then lo and behold, they've been buying since 2014. Only 20% of participants indicated that they do not find anything about the crypto asset class appealing. And once again, 20%. Is probably, and this is in the nicest way, is probably like the Warren Buffett investing minded people, because there are always, I mean, even now you see, I mean, don't take this year as an example, but when stocks do well, you're always going to have a good 20% of firms and people who are saying, we're not really into stocks. crypto can do extremely well. People don't find crypto to be a thing. I know a lot of people who don't even care for real estate. A lot of people don't even care to have real estate on their portfolio because they simply don't care for it. So you're always going to have that sliver of people who just simply don't want any exposure to it. But my goodness, how great it's going to be in 5 years when that last 20%. Because these are the people, when you talk about the actual skyrocketing prices of crypto, we need this 20% not to be in the market. Because when the other 80% they're buying up and buying up and buying up and prices begin to like dramatically rise, it's the last 20% that really FOMOs hard, head first. They slam directly into the pool, trying to buy up as much as possible because they know that they've missed out early on. That causes the prices to really rise. Anyway, yeah, all over the place. There we go. It says Fidelity says nearly 80% of institutional investors see the appeal of digital assets. I assume in some way they are probably all invested, either directly or indirectly, whether they know it or not. They are exposed to crypto in some sort of way. It just happens to be the ones who are buying it physically and are holding it. The ones who got in, like all the Rockefellers and stuff like that, about a good couple of years ago, who have 10, 15, 25,000 Bitcoin locked up in chambers somewhere or in mountains, who are going to do extremely well for themselves in the future. Anyway, that's the Fidelity news. And let's move on. We have a lot of news that's everywhere news today. Stampede Venture, owned by Greg Silverman and John Berg, and the Winklevoss twins have teamed up to produce a movie based on the book called Bitcoin Billionaires by Ben Mezrich. Mezrich's second book after Accidental Billionaires, the movie being called The Social Network, is the story of the redemption of the success in the Silicon Valley by the twins. The sequel of The Social Network will portray the next phase in the twins' lives. It will also introduce the success of a decentralized world and how the twins contributed to, and became billionaires from it. As the first movie won 3 Oscars, really? Including the one of a Best Adapted Screenplay. The hopes with this will be riding high as well. Silverman said, "Oh gosh, this is Rocky 2 meets Wall Street. What? In a world filled with unique and mesmerizing characters, this is going to make an incredible film." With the Winklevi producing the film and Ben Mezrich writing, the film can make a hugely positive outcome for Bitcoin. The brothers noted that Mezrich has portrayed the colorful frontier days of the cryptocurrency revolution in the book, and they are excited to share their early years. So about a good 2 weeks ago, there was a podcast I listened to. Oh gosh, what was it? I think it was What Bitcoin Did. I think that was it. And the Winklevis were on there. And it was a really weird kind of podcast. Long story, hyper 45-minute long story short. There was a book that was written about them, about the second phase after the entire Facebook fiasco happened. For those of you who don't know, not a spoiler at all, because this happened about a good 15 years ago. Instead of, I think, having the full payout in millions of dollars from Facebook, I think they took a huge portion of that in Facebook stock. For those of you who also don't know, many, many years ago, there was a guy, I think when Facebook barely had enough money, there was a guy who actually painted the office of Facebook. And they were asking him, we don't have the money right now to pay you. Would you like some stock? And the guy was like, okay, yeah, that's fine. And they kept on paying him in stock, like actual physical pieces of paper. And when Facebook went live on the stock exchange, this guy made tens of millions of dollars. And it's really funny because I think he would have only been paid around a good like $5,000 or $10,000 for painting the entire office of Facebook. And lo and behold, him taking stock made him a super mega millionaire. So the same exact thing happened to the Winklevosses. They were already extremely rich, and I think it's kind of weird myself that they are being portrayed as like these down and out characters, like Rocky 2. Like these guys were already extremely wealthy, but it just so happens that they took a portion of their Facebook stock that was tons of money, and they pushed that into Bitcoin many years ago because I think someone told them on a ski trip or something like that. And I mean, this happens when you have 100 million to burn. Sure, let's put 1 million into this, into these numbers on the screen, and they became billionaires from it. So yeah, all I can say is I hope this does well. There was a movie that came out last year called Crypto. Probably one of the worst things I've ever seen in my entire life. It had nothing to do with crypto. It had to do with like a bank heist and robbery and a whole bunch of other crazy nonsense. And the people decided to launder money through crypto as opposed to like anything else. And also, like, a lot of people were hoping that the movie Crypto would have been like a harrowing tale of how the cryptocurrency industry began, but it was just a complete mockery of it was basically like 2012 in a movie, like when everyone thought that Bitcoin was just used for illegal activities. So I have higher hopes for this movie as far as like actually showing what Bitcoin is for. And anyway, all over the place. A lot of people are apparently very excited for this. I assume it will do well, especially if they know how to market it well enough. To be fair as well, the actual Facebook actually did extremely well like once that movie came out, the first movie, because people saw Facebook in a completely different light, what have you. So, I mean, logically, there'll probably be tons of millions of people going to see this movie as well. And if they get the engines revved up enough, then this probably will cause a lot of new people to enter the Bitcoin space as well. Anyway, that's the Winklevoss Bitcoin movie news. And let's move on. Next up, Ripple Senior Vice President of Product Management and Corporate Development, Ashish Birla, says the San Francisco-based payment startup plans to open up new XRP remittance corridors later this year. Ripple's XRP-powered cross-border payment service, ODL, or on-demand liquidity, has already made some splashes in certain avenues of the institutional remittance industry, particularly among the U.S.-Mexico corridor. The Ripple executive says the company is en route to linking new countries to ODL in 2020. He said, Ripple is on track to open new ODL corridors, like I just said, this year, and we're onboarding new corridors, customers, and working with existing customers to ramp up ODL volume in important corridors, including the US dollar to the Mexican peso, the US dollar to the Philippine peso, the Australian dollar to the US dollar, and the Philippine peso as well, and from the euro to the US dollar. It remains unclear which countries or corridors Ripple plans to target in the short term, but the payment firm noted in February that it's working on adding new countries or corridors between countries and corridors, I don't know which word to say, in Europe, the Middle East, Africa, Asian Pacific, and Latin America. So the entire world. They could have said everywhere else in the world but the US. That's basically the entirety of the... So, yeah, here's the actual blog post from Ripple. It says, staying the course in remittances and SME payments. Ripple has been relatively quiet this year. They've been quieter than previous years. We used to have a flurry of nonstop news from Ripple and XRP all the time. It appears they're a bit more hush-hush. It could have to be with the potential of being a security. Who knows what it exactly is, but we're not bombarded with Ripple or XRP news as much as we used to be. Interesting that they're still, I mean, of course they would be. They're a billion-dollar company. Building up the actual remittances behind the scenes. Still no news on their inner workings with the Indian banks. Or I think we've only had news once this year about Ripple /XRP /SBI and dealing with the remittances within Japan. And we also had news about like the people owning stock in SBI receiving XRP, but that also is neither here nor there. Anyway, yeah, so I mean, logically, go for it. I would assume they want more XRP corridors to increase the usage of XRP, so by all means, please go for it. And to finish things off, Following the declining numbers of Bitcoin transactions, the total network fee has dropped significantly, whereas the total Ethereum network fees have seen massive growth as transactions on the blockchain increased accordingly. This has left as a huge gap between Ethereum and Bitcoin in terms of total fees. As per the information shared by Glassnode, a cryptocurrency data intelligence company, the total transaction fee on Bitcoin was lost to Ethereum's network fee for the first time in 2020. Precisely on the 5th of June, Bitcoin fees totaled $308,000. I assume that's the entire day. That's not one fee. While the total Ethereum network reached $500,000. Cool. Fast forwarding to the next 2 days, the Ethereum network fee gained more points while Bitcoin fees dropped even further. Bitcoin's fee settled to $253,000. Why are they giving such big numbers? That's very misleading. I mean, tell us what the actual average transaction fee was per transaction. Many people expect the gap to continuously expand given the transactions on Bitcoin have failed to pick up after the halving. So without having to read much further because this is hurting my brain, of course, once again, this is 2017 2.0. Transaction fees on both networks in 2017 also rose because more people were using their networks. We saw Bitcoin's transaction fees rise to about a good $28 to $35 per transaction. No, that's not a almost said that's not a typo. I'm not typing with my voice. The point is, very, very high, but Ethereum also had a lot of problems as well with their gas and all this other stuff and yada yada. So this is also, of course, going to happen. There are also many more things built on and adjacent to on Ethereum right now as well. So of course, the transaction fees are going to rise dramatically. This was also news all over the place. I wonder why, and if someone could tell me, that'd be great. Why people get surprised at things that have already happened. We know that Bitcoin is slow. This isn't news to anyone. I think it's fairly well known, and that when Bitcoin has too many transactions, there's a backlog, logically. And then also fees go up as people are paying more to try and get to the front of the line, logically. And the same exact thing for Ethereum, logically. And these will be around for a while until people have new chains and new this and new that, and this is hanging off of the side of that, and this is faster and better than it was before. So no one should really be surprised, so I don't get the popularity of articles like this, because it's going to continue to happen. Anyway, that's that news. I mean, logic. And yeah, let's move on. As always, a very special thank you to my Patreon supporters. Hold on, I have to sneeze. Bolero Bastos, Crayola Michelle, URL on Crypto with Lionel, Tigara Machonisa, Bake Me a Cake, Arfmedic17, Anytime Fitness, Monk's Corner Staff, Bodie McBoatface, Yes to Crypto, Miller Hitch Chest Every Day, and Kyle Skips Leg Day, Minting Coins, Jeremy Fox, Jim Gardner, Anthony Charles, Nick Mangialavoti, Paxis, Vlad the Impaler, Richie Rich 3, Nick Kanaya, Setsuna, Damien, Nicholas Run Earth, One Piece, One Love, Crypto Artist, Coldy 3D, Adobo, Bankroll Network, Crypto Joe, 242 to the World, Wise Night Owl, Jared Schneider, Master Ventures in Thailand, Moher Maroni, nope. Adam Graysick, Todd Mullis, A Bibliophobia, The Animal Reader, John Sarson, Nostromo, Chongo Lolo, Tsongo Lolo, Martin Steuer, Joshua Vineyard, The Pothead, Moonman High, XRP, Yasha Harari, Utopia 569, Oscar Maldonado, Professor Wally from Gunbot University. Thank you all very, very much for your support at the moment. The cryptocurrency market looks insane. Bitcoin is currently at $9,730 US. The coins have no idea where they want to go. Cardano's down by 4%. Neo's up by 3%. Maker's up by 22%. None of the market really makes a lot of sense right now. Just simply because, life and people are trying to figure out. If you haven't been paying attention to like the normal news and what's happening with the stock markets, I implore you to do so. If you're looking for a very interesting thing, I mean, it's interesting to me. As far as what's going on, they're having tons of analysts on every single day on these news programs now, trying to decipher as to why the stock market is going up. And some of the analysts sit there perplexed, and I think that's probably the most accurate word, because the stock market keeps going up as more people keep losing their jobs. People are pretending as if 19 never existed or isn't still around, and a lot of the stock market is being propped up almost exclusively by the trillions of dollars being printed by governments, or a lot of the FANG stocks, that is Facebook, Amazon, Netflix, and Google, and there's another A somewhere around there, doing well, because they're mostly digital, and also people are buying tons of things offline as they're stuck in their homes. So these are, I mean, like, they're dragging up the entire stock market, but it's also kind of falsified because, anyway, so the point is, people are now trying to figure out when, that is a gigantic when in the sky, the stock market is going to crash, because, oh, they rebranded. It looks gross now. The Omisego network, they rebranded to the OMG network, but those colors looks gross. Anyway, yeah, so interesting times to be around, and also with all of the news that we keep getting that major institutions and banks are buying up Bitcoin, because there's no longer an ounce of speculation. When you have news that basically all of Germany is into Bitcoin, and then you have Fidelity talking about 80% of them see an appeal of digital currencies, and 1/3 have openly said, yeah, we have some who's asking. And then the price of the cryptocurrency market doesn't go up when we know for a fact that there's like hyper interest in it. And then stocks go up. The stock market's reached an all-time high about 2 days ago. This is the year of illogic? I'll say the year of illogic. That sentence in itself doesn't make any sense, but it's totally fine because it's the year of illogic. I do hope you all enjoyed. I do hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching and or listening. Oh boy, I feel like it's going to be a long day. Thank you all once again for watching and listening, and I will most certainly be talking to you all soon. See you.